Good day, we go to the Sound Ejura, your favorite crypto trader and technical analyst. Welcome to Sound Crypto Academy. We are going to be learning how to make money with the crypto market. And right here today, I'm going to be explaining what fair value gap is all about, how to identify fair value gap in the market, and how to trade fair value gap and make money with the financial market. So first of all, what's fair value gap? Fair value gap is simply when there are imbalances or inefficiencies in the market, and like a fair value gap indicates a price gap on a chart where there is a significant difference between the closing price of one period or of one candlestick and the opening price of the other candlestick or the other period. Like, let me break all I've been seeing for you. See this right here. You can see that we're having like three candlestick formation right here. 1, 2, 3, right? Good. And you can see that the wick of this candlestick, this first candlestick right here, you can see that the wick of this candlestick is not touching the wick of this third candlestick. So the gap in between this first candlestick and this third candlestick, the gap between this wick, first wick and the third wick, the gap between them is what we call fair value gap. You don't need to stress anything at all. You don't need to crack your brain. You don't need to don't stress it. It's as simple as ABC. ABC, I mean, easy peasy lemon squeezy. You don't need to stress anything. Like I said, the gap in between this first week and this third week is what we call fair value gap. You might be thinking, this thing is simple like this. It's simple, okay? Okay, so the what are they calling the gap in between this first week and third week is what we call fair value gap. I'm going to show you how it looks like in the chart, but before I do that, let's just do what? Before I do that, just chill. Like, when I say chill, just hold on. Like, let me explain to you again. Chill, let me explain to you so that you are going to understand things clearly. You can see that the week of this first candlestick and this third candlestick, the week are not meeting each other. It's not like this. Having been it like this, the week of this first and third week we are touching each other, yeah, like overlapping. Then you can see this is not fair value gap. But since this week of this first one and third one, this first one and third one, they are not touching each other. So the gaps between this and this small gap is what we call fair value gap. Let me mark it out for you again. It's as simple as A, B, C. It's as simple as A, B, C. Yeah. That's simple as ABC. Let me just mark it out and we'll go to the chart and let me show you how it really looks like in the chart. So this is one fair value gap here. Let me first of all delete this right here so you can see it clearly. You can see that we have this one candlestick, 2, and this third one. And you can see that this first candlestick right here, you can see that the wick of this first one is not touching the wick of this third one right here. So the gap between this first and this third, gap between this first candlestick and this third candlestick is all called what? Fair value gap. You can see how I'm marking, like identify it. So you don't, once it's not touching each other, you don't to stress your eyes and say, if I see the touch, if I see no touch. Once you see, once it's a fair value gap, you will see that it's a fair value gap. Look at this one now. Which one? Which one should I show you now? Which one? I want to see that the one that is here. Look at this one now. Not even this one safe. Okay, let me mark. No, I don't want to cancel this one. I'll still show you on that one, Shabo. Just chill. Look at this one now. The candlestick of this first and this third. You can see that they are not meeting each other. This one and this one. They're not touching each other. So this is what we call what? Fair value gap. Fair value gap. That's simple as ABC. Then mark it out. Don't. And again, let me tell you something. This applies in what? In uptrend and downtrend. And let me tell you something. See, you don't just say you want to trade fair value gap alone. Don't just say, okay, wake up one morning and open your chart and start looking for fair value gap without marking out your structures. Thank God I've taught you guys how to identify structures, market structure, break-off structure, other block and others, or whatever was that strategy. So we'll apply them. Like, if for instance right now, let's assume you've marked out your structure, you've known your applied market structure, like you mark out your structure, maybe you're in uptrend, downtrend, or and let's assume you're in downtrend right now, you want to identify your lower low, lower high, then at that moment you now want to look for your point of interest, like your entry. You want to start watching out for your entry. At that point you want to start looking for your entry, so you can add fair value gap as your confluence to your trade. You get the point? Not that you just say, okay, like as your entry point, let's assume you just say, okay, this is a fair value gap, right? Okay, this is another block, okay, it's connecting to your trend line. Everything is now connecting together. Then you cannot apply it as a what, as a confidence. Not that you just want to be looking for fair value gap up and down, and you want to trade that fair value gap alone. No, it doesn't work like that. If you do that, you're gonna see shaking. That's just the real fact. So let me look for another fair value gap, right? Once you see it, you say you go, don't see now fair value gap. Look at this one right here again. Look at this one. This work first week, second, third, and this third candlestick. You can see that they are not touching each other. This one and this one. So the gap between this one here and this gap that's here is what we call fair value gap. I don't want to mark that out because I already marked this one out here. So let me look for another one. Let's go for one more. One more ASAP. One more ASAP. Oh yeah, let's go. This is another one here. Don't touch. Once you see fair value gap, we know at that instant. Look at this another one right here. You can see this first week, right? One and this third one. You can see that they are not meeting each other at all. They are not touching each other. You can see like that. So that gap that is in between them is what we call fair value gap. It's as simple as ABC. Let me look. I've cited. In fact, the what are they called? I gave you guys safe. Like the last signal I dropped in the group there. I mean, the channel there. I mean, WhatsApp group there. The last signal I dropped was fair value gap. So fair value gap with some other words, other point of interest added to it, like some other like other block and liquidity and co. So you don't just want to trade fair value gap alone and start looking for fair value gap, fair value gap, fair value gap. No, you add it as a confluence to your trade. I cited one this thing before and I forgot. Okay. Look at this one, right? And I think this was what the market even saw safe that made it trigger. Let me look at this, right? You can see the market retested it. Well, let me show you. Let me mark it out for you. I've cited the water they call. I didn't trade it too. I didn't trade it, but that was what market. I'm going to show you what market is. So look at this, right? You can see the wick of this one, of that small red candlestick. The wick of this small candlestick. Does even have a wick. So you can see, and this third one, this one, and this third one. So what are they calling it between? The gap between this one and this one is what we call fair value gap. It has, I've said it, don't complicate things at all. It's as simple as A, B, C. You don't need to stress yourself. Don't stress it. If you stress yourself, you're gonna see shade. Like don't, it's as simple. ABC. Simple as ABC. Life no other at all. That's it. That's it. So let me show you what the market did here. Let me first check the overall trend. Okay. It was uptrend before. Then you can see it was uptrend before. This was our previous higher high, last higher high. Market broke. Market broke what? Change of character that happened. When change of character happened, market went back to do what? To retest the what? Previous, like market went back to retest the what? This fair value gap I'm injury. I said previous. Sorry. So then market went back to retest. Yeah. I didn't mark out. Okay, let's show position. So this was what market did. Let me delete this. The last trade I dropped. I didn't just see the again. It was dots now. Yeah, it was avocados. So look at this. It was this fair value gap market respected. It was this fair value gap. Can you see? It was this fair. So market retested this fair value gap. When the moment market retested this fair value gap, what happened? Market got retested this fair. Then what happened? Markets went down back and broke another structure. Can you see? Broke another structure. Can you see? So this is how fair value gap work. Just, and like I said, don't just trade fair value gap alone. They just say, okay, this fair value gap you want to trade. this you want to know, you want to start looking for fair value gap, you add other confidence to it. For instance, right here, like I said, for instance, how did I know? You have to check, okay, first of all, market structure now. You want to identify your higher high, higher low, are we not trend, are we down trend? Once you've done that, you can add your Fibonacci to it to know premium and discounts and all. So once you've done that, then you can start looking for point of interest like your entry. Once you've done like if okay, then as you're looking for your entry, you can look for what are they called add your Fibonacci. Once you cite a Fibonacci, I say Fibonacci, sorry. Once you cite a fair value gap, I mean, you can what add it as a confluence to your trade and other what are they calling it another strategy. So it's as simple as it. Can you see right here? This is a very sweet trade. As market retested it like this, clear the fair value gap. What happened? Market broke another structure. There are a lot of them. Like I said, the last trade I took, it was fair value gap and it works very fine. Like I said, not how should I put it? It's not just every time you enter feel like you enter the fair value gap trade. It's not even only fair value gap, other strategy too. It's not it can't be working for you 100%. That's not about trading. It doesn't say okay, like you enter this trade right now with this same strategy, you can't get 100%. That's it. So as a trader, you have to add risk management to your trade. Always ensure you do what add risk management, apply risk management while you're trading. So thank you for watching and do what that have a blessed day. And like I said, also practice, practice, practice. Don't just say you want to start trading instantly. Practice, 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 practice. So thank you for watching and have a blessed day. Enjoy.